Thanks so much for tuning in to the Real Estate Today podcast. Right now, it's a little introduction to the 1031 exchange.
I'm Bob Nelson, real estate investment broker with Pacwest Real Estate Investments. Joining me today is Megan McMahon. She is the exchange facilitator, the person who's needed for you to complete a 1031 exchange. She is Cascade Exchange Services, Eugene, Oregon. Megan, thanks for joining me.
Thanks for having me.
Let's go through the basics of a 1031. What do I have to do in order to have a qualified tax-deferred exchange?
So the theory behind 1031 is that if you own a piece of real property that you're holding for business or investment purposes and you sell it, typically you would have to pay capital gains tax on that sale. But if you do a 1031 and reinvest in other real property to be held for business or investment, then that tax is deferred.
Okay, so I have to have a qualified property that I'm selling. Not all properties that I would sell would qualify for an exchange. Is that correct?
Correct. Yeah, you have to be holding it for business or investment purposes.
Okay. It could be, though, a bare lot that I've held for investment purposes, not producing any income. That would also qualify, right?
Absolutely.
Okay, or timberland, that sort of thing. Doesn't necessarily have to be income property, but income property is, of course, the thing that most people are after today.
Yes, yeah.
The cash flow. So I have a qualified property that I started with, and I go into or acquire another qualified property, and it has to be real property. Let's emphasize that. What happened with the most recent tax change, the Trump Tax Act? It's not its proper name, but that's who's attributed to doing it. But what happened to the personal property exchanges?
Yeah, so the IRS has taken away personal property exchanges. So you used to be able to exchange trucks and tractors and that kind of stuff that you're using for business purposes, but now you are no longer able to do that. It's solely real property.
Okay. Now, as I do this, what are the other qualifying characteristics of a fully tax-deferred exchange?
So you have to purchase like-kind property, which is your real property to be held for business or investment purposes.
Okay.
You have to identify your replacement property within 45 days.
Okay.
You have to acquire your replacement property within 180 days.
Okay.
You have to buy even or up in both net value and net equity, and you have to use a qualified intermediary.
We're going to continue on tomorrow with our next program. Megan, thanks for joining me. You'd find Megan at Cascade Exchange Services, downtown Eugene, 541-687-2233. I'm Bob Nelson, real estate investment broker with Pacwest Real Estate Investments.